Let's record. All right, it is Wednesday, October 18th, 2023. We're just going to do some market analysis, and we'll go through the portfolio, and then we'll just do some general Q&A. We'll go till about 1:50 or so today. Unless we're out of questions, then we'll stop sooner. And I wanted to jump in and just look at a little bit of quick technical analysis on the session. And I did do some zero DTE trading today, and everyone's always asking, what are you doing? So I thought I would share it a bit. Some of you don't care, so I will keep it brief. You can see on my screen right now, I am using a 15-minute and a 3-minute chart. And then over on the sides here, I do watch UVXY, and I also do watch the advanced decline line on the S&P. So those are my two little areas that I can keep an eye on what's going on in the session. So I'm going to walk through that, and I will then get to stuff in the chat. So we opened this session today, and what I marked here, and I know it's probably hard for you guys to see. I don't know how I could make it a whole lot better, but I'll do my best here. But if you can see my screen and what I'm doing, I'm going to play with the 3-minute chart here. The 15-minute chart gives me my overall direction. This is the exact same setup. There's no difference between this and what I would be doing with a weekly daily chart. If I looked at a weekly daily chart, I use the exact same type of methodology where the longer time frame, in my opinion, is in charge. The shorter time frame is my trigger to get in and get out. So I'm always looking at the longer term time frame. What's the direction that we're going? And depending on what that direction looks like, I will make some intraday moves. I'm not going to do a whole lot of the at the money iron condors or iron butterflies or any of that kind of stuff anymore, because the moves on the days are just outsized. I mean, you were up and down today over 40 some points on the session, so way outside the expected move for the day. So when you're looking at the expected moves on the day, normally you're looking 25, 30 points on the day. I think tomorrow might be for tomorrow right now is like a 40-point move. And we are typically exceeding those moves. So I think putting on any kind of those iron fly at the money strategies are pretty risky at best on there. In high IV environments at the open, it's a little bit better. We're still in a fairly low IV environment. So I don't want to hear anything about VIX or anything else because the VIX doesn't mean anything. Okay, but to me, we're still in a fairly low overall IV environment. But we're in a downtrend. So if I'm looking at the 15-minute here, we were in a downtrend. We opened here, and I look at the first 15-minute range, and I drew these two little blue channels, one at the top, one at the bottom, and I looked at the first 15-minute range. Sometimes if you're breaking out of that 15-minute range, could be an opportunity to go in that direction as well. So our first break really was more to the downside. We did pop the upside a bit. And then you can see on these little orange moves, this was the first hour range. So the top of the orange was the first hour. The bottom orange line here was the bottom of the first hour of trading. So once an hour was in, we did break to the downside, and we've been to the downside ever since, except for the last 15 minutes of the day. So we've been in a pretty good downtrend. But if you look at yesterday, high to the close yesterday, to the open this morning, you've been in a solid downtrend, and this blue line is the downtrend line. We did not break that. So if you're in a downtrend, trying to play anything that's against that direction is probably not the best idea on a zero DTE trade. And yes, should you be hearing something? You should. So if you aren't hearing me, then you have some kind of problem. I just need one person to tell me that you do hear me. And then I at least know that my stuff is working. But it was working earlier today. So, yep. So we're working. So you can hear me. So if you cannot hear, you have some problem with your speakers. take a quick look at that. But if you can't hear me telling you that, you wouldn't know anyway. All right, so anyway, we broke to the downside. So what I did here was, as soon as we made some initial moves in here, I put on a call credit spread, and I posted in the chat as well that this yesterday's high of 43, almost 4,400, 4,393, and the bottom of which was around 4,340, those were my ranges I want to be outside of. So my first call spread on the session today was, and again, I'll keep this very quick because I know some of you don't care on this stuff. So the first call credit spread was a 43.95. So I was up outside of this, and even though on SPY we did fill this gap, which is the gray area, we did not fill the gap yesterday on SPX. But anyway, I wanted to be outside of this range when I put my first call credit spread on. And I did that call credit spread at 10:03 this morning. So about 10:03, which is right in here, is where I put on the call credit spread. This is the 50 EMA moving down, the 21 EMA moving down. It was widening as it fell here, and at 10:03, where are we? Over here on the week, on the 15-minute at 10:03. Right in this area here, MACD was falling, stochastic momentum was falling, RSI was falling. So all of those were falling on the 15, which is the strong one. So I put that on. Yeah, it did run up a little bit here, and then it's to tail off. So good trade on that one. Then I also put on another call credit spread around 10:36. So right around here, when MACD started to roll, after this run up, MACD started to roll over, stochastic momentum rolled over, and RSI moved back down through the 50 and that happened right around 10:24. And I put on a second call credit spread at 10:36, which would be right around this level here. So as MACD was falling, another call credit spread as we were falling down. And then I did put on a put credit spread. And I'm just walking you through this just so you can see my thought process at 10:59. So at 10:59, or right around 11 o'clock here, this is where I put on a put credit spread. Why did I do it at roughly 11 o'clock? Well, stochastic momentum had already gone oversold and was starting to move up. RSI was, MACD was already starting to roll up here. RSI was starting to climb as well. And if I looked here, and it's a little bit more difficult for you to see, but you can see right here at 10:45 to 11 o'clock, see this red line on the bottom here? This particular line on the chart, this red that we crossed, that's the 3 ATR. So if you're looking, I look for that as an oversold area. We pierced it on this candle here, and then we started to bounce back up from it. I thought that would be a decent place to put in a put credit spread, and that also was a nice 50% winner at 11. We just drifted sideways, and then actually that thing came off at 11:35. So actually that closed right in here on this little candle up. So we went from about 11 down in here to about 11:30 here on this move up. Anyway, just giving you some sense. And the only reason I did the put credit spread and I had a tight leash on it was we hit the 3 ATR, and usually from there you get somewhat of a bounce. Doesn't mean we can't keep going selling off, which we did, which has been great for the call spreads that we have on. So anyway, I just want to give you a sense of how the day has gone. And now you see us starting to bounce. So we came down, we filled this previous gap. So let's go back to maybe an hourly chart here and on SPX. Okay, if you look at SPX here, back on the hourly chart, you can see a gap, an open gap on the day on Monday. So this is where we closed on Friday. Okay, then we gapped up here on Monday. So this gap had not been closed yet either. on the 1 hour chart. We did come down into it at the open yesterday, and then we bounced in, off of this level. But we never filled this gap. So now we have filled the gap. I thought also that would be a decent little support area. Anyway, I just wanted to share that with you guys. If anybody cares, it just gives you a sense of what I was looking at when I was playing some intraday 0DTE. I'm only paying directional, and I'm only playing pretty far out of the money call and put spreads on the session. I'm usually looking somewhere around the 5 or 6 delta. I'm going about 20 to 25 wide, trying to grab myself somewhere between 50 cents and 70 cents, somewhere in that range. So hopefully that gives you some sense of what I did on 0DTE. I've closed everything but one. So one, even though I did not close at 50%, because the direction has been down all day long on the S&P. So I thought I would let it run a little bit longer. I'm letting the first one run. It's well past, I sold it for 65 cents. It's at 15 cents right now. I'm trying to close for 10, probably being a little too greedy. I may just tighten that thing up because the markets are starting to rally a bit. So maybe I'll be a little less greedy here on that and let that thing go away. Let's see. Did you look at just to be outside the top level or a certain delta? Again, I think I'm kind of just covered that a little bit by accident on you, but I look at a delta area. So I'm looking at a specific delta for me, which is about 5 or 6 is where I start, but I also want to be outside of those levels. So I do want to be outside of those levels that I just pointed out to you of where do you see support on the day on SPX. So where do you see some support? And I saw, I used yesterday's low, yesterday's high as some ranges that I wanted to be in. I also looked at the gap fill, and maybe throw in there some levels on either Bollinger Bands or something else, which Bollinger Bands are also right around that 4409. So I think 4400 is a pretty good level for the most part. Anyway, all right, let's just jump in, take a quick look at the market. SPY, I'm still bearish. Why? Because this is the weekly chart. And again, to me, the weekly is in charge. You've got lower high, lower low, another lower low, and right now a lower high on this week. That's a downtrend. And the top here, you can see the lines are coming down. That's a downtrend. Yeah, I'll talk about ATR in just a minute. So good question. But we're in a downtrend. If we're in a downtrend, any bounce in this downtrend is simply that. It's just a bounce in a downtrend. We have to actually start to make new higher highs and higher lows, but we're going to have to break this previous mark up here around 450 on SPY or 4,500. Until we get to 4,500, it's not anything to be bullish about, in my opinion. Okay. And again, to me, longer time frames are in charge until they're not. So that's why I pick what I pick, and that's how I'm making my decisions, is that most everything is chosen for the most part based upon longer time frame in control. Shorter time frame can be little moves within that. When the shorter time frame matches up, like here, and we start to head lower, and RSI is heading lower, MACD is heading lower, then you want to get on the train because you're in a downtrend on the weekly, and now you've got a downtrend on the daily. To me, that's the best setup to begin. I don't want to really try to be buying down here, even though RSI is oversold, MACD is rising. That's all great, but it's just within the downtrend on the weekly. I don't care what time frames you use. You can use 1 hour, you can use a 4 hour, you can use a 15-second, 15-minute. I don't really care what you use. To me, I think it's always better to have 2 time frames, a longer time frame and a shorter time frame that tells me what to do. And it's usually 1/5 of the time frame. So if I'm using weekly, then the daily is about 1/5 of that. If I'm using a 15-minute, then the 3-minute is the 1/5 of that for me. That's how I do it. Anybody can do it any way they want to in there. But I just want to give you my sense of how I'm trading these charts. And let's take a quick look at a few other things. Again, here's VIX. Not that anybody cares. You know, I don't care because I hate VIX. Oh, it's up to 18 today. That's a nothing burger. It's been 18 9,000 times in the last 6 months. Okay. It's pretty overdone levels down here. Does it mean that VIX can't go up? No, but VIX is pretty much also in the same type of a thing. It's in a downtrend. VIX has been dropping, volatility is dropping. Any bounce here, to me, is just a bounce in a downtrend until VIX gets into the mid-20s. Okay. Yes, a little uptrend in VIX going on. Beautiful. Okay. Means nothing to me. I don't care about VIX. So anyway, that's why VIX doesn't do a whole lot of anything for me, because all it is right now is a little bit of a bounce in an overall downtrending VIX that's just been slowly dying for a couple years in here. Now, 20 to 22, we start averaging in there somewhere. Okay, now you're talking. Now maybe that will get some things moving out there, but nothing I do is really based upon VIX, so it's all good. It's trending up, great. VIX is up today. I'm sure somebody will care about that somewhere. Here's the US dollar. Now, the dollar has been in this tight channel upwards for a while now, dating back till July at these lows. In this channel, now it broke below the channel. Now that channel, to me, becomes potentially a resistance level. So we broke through this channel on the daily and came up, broke it temporarily, bounced on it, tried to do anything, couldn't do anything. It's up a little today. So the dollar is up today. That's all good. If it breaks back inside the channel, then we'll start to look at it. If not, we'll look at some other levels. This particular level here dates back to this previous resistance high back in March. And that's also where it kind of came down and bounced off of that recently. So this level may continue to be somewhat of support for the dollar. We'll see. We're bouncing off the 21 EMA as well. So we've continued to bounce off the 21, almost bounce off the 21, bounced off the 21, bounced off the 21. Now the 21 was heading up, and now it's heading a lot more sideways along with the 50. So some sideways movement overall. We'll see where the dollar goes. We could use that sideways movement, and we'll see. TLT, you guys know my take on this. If you watch the nightly videos, same setup. You've got a downtrend. You got two different downtrends and two different time frames on the weekly here. One that dates back to November, the blue one, which is still intact, and then a more recent one that's got a lot of points on it as well. I could probably even draw another one from here that's also got several points on it. So you've got plenty of different downtrends. We haven't come close to breaking any of them. So plenty of different weekly downtrends to look at here. I know it's a lot of junk. MACD's falling, RSI's falling. Down here, nothing excites me at all on bonds. And then if you're looking here, look at the distance here between the 50 moving average and the 21. It's getting further and further and further and further apart now. So I don't know what the exact distance is, but this distance here, okay, if I look at the distance today, versus this, about the same distance about a week ago, okay, and now looking back a little bit further, we've started to accelerate. So this distance previously, a couple weeks ago, was a lot smaller. So you're now at, in my opinion, at least for everything that's on this chart, if you just go through this entire little exercise like this, this is almost as far apart as these have been. So we've just been accelerating to the downside. There's no reason to get bullish on TLT or anything yet. It just keeps gapping down. MACD is falling, RSI is falling. It's below the 50. All right, I'm not doing anything on TLT. So anyway, I think you guys get the point on that. Same thing with TNX. As if I'm looking at it, the distance between the 21 in green and the 50 in fuchsia or purple or whatever, it's getting bigger. The rates are heading up. So I've also got the 3 ATR on the daily. I don't have it on the weekly because it's not as big of a deal on the weekly, but the daily chart here, I do have the 3 ATR. So I think question from FD was ATR better than Bollinger Band. Well, I have both. So you can see this is Bollinger Bands in gray. And we're at the top of the Bollinger Band. But you can be at the top of the Bollinger Band and go outside of it and just ride the Bollinger. If the Bollinger Band's pointing up, you can ride it up. I have the Bollinger Bands here. I use them less for, hey, if we touch it, great. But you can see we've touched it and broken it and kept going. But the 3 ATR, typically, if you are breaking this, and we did break it quite a bit in here, okay, I'm looking for a mean reversion back in for the most part. So I like the 3 ATR for a little bit of a mean reversion. And I want to revert back to, really the 21. So we revert back to the 21. Now we're back up. We're not to the 3 ATR. Bollinger Bands are opening. That's really what I'm looking at are the Bollinger Bands widening? If they're widening, volatility is increasing and the move is going to accelerate. Bottom line. Okay. Bollinger Bands were squeezing in here. You can see this thing was getting tight. So on the weekly, Bollinger Bands were squeezing in this area here. Okay. So when Bollinger Bands were squeezing in this area, okay, then this is a good idea that, okay, a move is getting closer to happening. And then now you can see that over here, the Bollinger Bands have definitely expanded now, okay, which means that move is accelerating to the upside. So that's just one thing to look at. It's really how the squeeze is construed a bit. It uses Bollinger Bands and it uses Keltner channels. When the Keltner channels get inside the Bollinger Bands, it's in a squeeze. And then as these things expand, that squeeze fires. So if you're using the squeeze, that's essentially what it is. You can do the same thing by just watching Bollinger Bands on it. All right, so there's just a little info on that. All right, we're 25 minutes in. Just want to keep 6A. I'm not going to go through all of these futures. Let's just skip right to oil because everybody's got oil stuff going on and everybody gets all panicky on it. So let's take a look at what's going on in oil. So oil has been in this weekly uptrend for a while now, and it's actually expanding. But this channel, we've been up, we've been down, we've been up, we've been down. Now we're moving back up. I looked at some previous resistance levels here. That's what this line across was. We haven't really, we have hit it a couple times, but not perfectly. So it's really not a helpful line anymore. Some previous resistance up here, which we did fail at and come back down. So that line still, to me, is pretty valid since we held on to it a bit. But you are in an uptrend in oil. So oil's been in an uptrend. Looking at the Bollinger Bands and the 3 ATR. So Bollinger Band, look how tight these were back in here. Okay, back in August, this Bollinger Band was pretty tight. As soon as we started making this move, these Bollinger Bands opened up pretty wide, okay? And you could see this expansion until it started to curve back over again, meaning that, okay, maybe now we're running out of some volatility in it. And you can see the MACD starting to tip over along with RSI at the same time that the Bollinger Band started to flatten out a bit. Let's see, a few more people. So I use a combination of them. I like the Bollinger Bands, but not because I like them at a level. I don't think they predict anything from a level standpoint. But I do think if you're watching them expand and contract, I think that gives you a sense of what's happening with volatility. And if you look at oil here, these were expanding, okay, on this down move and then the subsequent bounce. This is only a bounce in a down move here. Okay, we were running down to 81, and here we hit the 3 ATR in the bottom of the channel at the 3 ATR. That was a beautiful place to buy oil and start selling, 112s or naked puts or something in oil. Now, when Bollinger Band was expanding, both sides, now the Bollinger Bands are starting to tighten up a bit on oil. You can also see the 3 ATR, which is your Keltner channel, the 3 standard deviation, starting to tighten a bit on the upside. I kind of like the way that looks, okay? If I'm following my particular methodology of as Bollinger Bands and the Keltners start to pinch in, volatility is going to come out. Has volatility been dropping on CL a bit? Well, not right now, but it's about 61. So we're going to keep an eye at the IVR, I should say. But we're going to keep an eye on that, and we'll see what happens. RSI is kind of flattened out a bit here, but look at the weekly. MACD on the weekly has absolutely been coming out for 5 weeks now, and oil has been trending down. Oil's not at 115. Just by reading comments, you would think oil's at 120 right now. It's not. Oil's at 86, 87. Okay. It's nowhere near the 94 that it was at just a couple weeks ago, number one, and it's definitely not 100 and something. Okay, so oil's really not doing anything crazy except the fact that IV is rising in oil, which is what I think you have to recognize and decide how you want to play it. We'll talk about our strangles and stuff in a minute. How is this playing into it? Well, yeah, your strangles are taking some heat, okay, right now, not because oil's on a rampage, okay? Oil's only gone up 3 points in a week, okay? And if you want to go back a couple weeks, oil's gone from 80 to, it's gone up 5 points. That's it. 5 points in 3 weeks on oil, okay? But it's down in the same amount of time. Oil's also down 7 points in a week. Oil's gone nowhere, okay? We have to, oil's really gone nowhere. It's gone up, it's gone down. It's right in the middle of its current range right now. Oil's done nothing. All you're seeing and all you're feeling on oil is a rise in volatility, which for us as premium sellers should get you thinking, how can I take advantage of this increased IV in oil? Okay. All right, do you think oil's going up? Well, it's been in an uptrend, right? Okay, even though there's a recent pullback on the weekly, we haven't broken the uptrend. So the uptrend is still intact on oil. It's pulled back. It's bounced slightly off of it, but not a whole lot. Okay, oil hasn't done a whole lot of anything. So let's just keep an eye on it. But if I'm going to play something, okay, I'm going to play bullish because that's my trend. So 112s, good plays. Selling naked puts, I think a good play. Why? Because volatility is expanded and looks like it might be starting to contract a bit, okay? And I can get below what I feel is some support levels. So I think there's some support down here, in my opinion, around 75. There might also be some support around 76. You've also got to go through this uptrend. You've got to go through the 21 EMA and the 50 EMA on the weekly. And you also have to go through the 50 EMA and the 21 EMA, okay, on the daily. And we are sitting right at the 21 EMA on the daily, okay? We straddled it today, okay? Oil is not on a tear. It's not rising, okay? This whole Middle East thing isn't really affecting oil to a large extent. You're only up a couple points on oil. So we just got to sit back and let it do its thing. Let volatility and theta, let them do their thing on oil. All right, that's enough on oil. I've beaten that horse to death. All right, now gold, on the other hand, let's take a look at what's happening in gold. So if we look at the weekly, okay, which determines our current trend thesis, what have we seen on gold? Well, we've been down in gold since April. Okay, let's just back out just a tad here. Okay, we had an uptrend in gold from October of last year all the way to this high, on May 1st. Okay, then we broke the downtrend, or we broke that uptrend. If I drew that uptrend line, I'm just doing basics stuff here. I'm not any kind of whiz on any of this stuff. Okay. Well, we went up, we bounced, we went up, we bounced, and then we broke it. And then we tried to come up, we failed at it, and then blah, 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 blah. Okay, we even tried to hit it again here. Okay, the uptrend line on gold was broken. So you've been in a downtrend on gold, and in fact, fairly sideways. But you've been in a downtrend on gold. We draw the downtrend line. What happened, this week? Well, last week we ran from the bottom of the channel to the top of the channel. We were primed for gold to break out. Okay, you knew gold was probably going to make an upside move here if it could break this downtrend line, because you bounced off of support and the 200. You broke above the 50, you broke above the 21 last week, and you closed right on the uptrend line for the week last week with some pretty good momentum. Okay, MACD has been moving higher for 2 weeks now. RSI broke through the 50 mark last week. Okay, that's my trigger point. When RSI goes up or down through the 50, big trigger for me, that we are momentum trading in one direction or another. So now if we zoom in on the daily, well, look what the daily had been doing. Back here on the 5th of October, you reversed and you were heading higher. Okay, when MACD broke through this 50 back on 10.6, okay, it was on, I'm sorry, back here on 10.12, the blue line. When MACD broke through here, hey, that was to me a sign that we're going to break through this trend. Okay, so we knew gold was coming. We knew gold was rising. It was in a downtrend, which is fine. It's an uptrend within a downtrend until it breaks. Now it broke. We got gold moving. The only thing that's hurting anybody on gold right now, it's not the fact that gold is rising. Okay, it's the fact that IV in gold is also rising. How can we tell? Look at these Bollinger Bands. Okay, look at the Bollinger Band on the daily, and let's draw again. Let's just get the circle out. Look how, come on. Look how tight these Bollinger Bands got back here on 922. This was an indication that a big move was happening. Okay, and you got it. You got the big move to the downside. Okay, can you take advantage of this type of a move? Well, you're in a downtrend, remember? And we hit the top of the trend line. You're in a downtrend. Bollinger Bands were tight, and you broke through to the downside here. Well, of course, Bollinger Bands expanded. You racked through the 50 RSI to the downside. So this was an easy downside call on gold. It's all good. And as we've got now, you can see volatility starting to expand as this Bollinger Bands started to get wider. Okay, volatility was increasing as we dropped to the downside. Then we bounced. We started to head higher. You could see the bounce coming because MACD and RSI told you the momentum had come out of this move. Okay, and once we started moving higher, okay, now we get an upside move. Now, Bollinger Bands starting to open up on the upside and a little bit on the downside, even though they started to curl in a bit here. So volatility for gold still at a pretty good clip right now. And potentially if these Bollinger Bands continue to open up, we could see some more Volmageddon happening in gold. So I think you have to keep an eye on gold here because I'm not sure that the volatility is done. 3 ATR is this yellow line. We hit it today. We exceeded it today, and then we fell back in, and we're sitting right on it. That's a pretty good sign to me for gold as well, to not get too panicky here. RSI is moving higher. It's not overdone yet, but you're 5 bars into a MACD move. I know the squeeze takes about 8 bars before it starts to settle down. You can use something similar on MACD, that if you're 8 bars in on an up or down move, you can expect some of that momentum to stop. So it's about 8 days of move on that once it launches here. So you had a good move on gold, off a little bit of the highs today. It's all good. How can you play this move in gold? Okay. Number one, we could sell strangles because we've got a nice IV pop in gold. We can be selling strangles. Okay. You can tell me it's flight to quality, and it hasn't been flight to quality in gold for a year now. So I don't know why. Did all of a sudden somebody wake up yesterday and decided it was a flight to quality in gold? Okay. Or is it just a combination of a variety of factors, and gold being oversold and from a technical level moving higher? I don't care what the reasoning is on it. Doesn't matter to me. You trade what you see. And right now we see expanding volatility in gold, a move to the upside, and getting extended. When's the last time gold got extended? Well, this whole area down here. Nope, no, did not want that. We're going to run out of time. I know it today. So maybe we'll do some stuff tomorrow. This whole area was below the 3 ATR. I mean, this was extraordinarily extended. And then we came down and actually touched on the trend line. This is why I don't get too panicky when we get outside. I don't get panicky at all, but this is why I wouldn't get too panicky is, hey, you broke the 3 ATR. That's a long time to be outside the 3 ATR, by the way. That's like, being in space in a capsule and you go out without any oxygen. At some point, you're going to run out of, you're going to run out of the oxygen in there if you don't have extra oxygen with you. Okay. You're diving, your tank is on empty. You can only exist for some period of time outside of the capsule before you run out of oxygen. Well, that's what happened here. We're not quite to that part on the upside, but rarely do we get outside of it for more than a day or two. This is a pretty big exception in there. So there's always exceptions to the rule, but I think you just play the averages that, okay, gold volatility and gold to the upside getting a bit extended here. Let's keep an eye on it. We're not quite to any kind of oversold levels or overbought levels yet on RSI, but we could get there. I'm not saying gold doesn't go higher. Could go 2000, could go 2020, 2040. Who knows? Gold could continue to move, but we'll keep an eye on it. Feel pretty good with where we are on at least some of the plays in gold. I think my closest call is 2190, which I can't even get on this screen. Okay, my closest call on gold on a strangle is 2190. That's here. Okay. Gold hasn't made this big of a move in months. Okay. So I feel pretty good about where we are on strangles. I get it that your strangles are getting tested. I get it that we have to play the smart piece that volatility is expanding and I got to stick to my rules, because if you don't stick to your rules, you're going to get burned. You know what? It's up to everybody individually to make that call. I know some of you are closing them out, sticking to your trade plan. You can't ever get killed long-term sticking to your trade plan. Okay. You're going to lose some trades, but if you sized them right, it's just a 2% loss. Okay. 2% loss. The market can go up 2% in a day. Okay. We could go up 2% tomorrow and have a 2% gain and make all of that back. Okay. So you've lost 2% if you close the gold strangle. If you want to hold it, okay, which I know some people are considering because you're way far away from your strikes and volatility is overdone, I have no problem with that either. Okay. Just make sure that you build that into your trade plan for the future. I don't suggest trying to make up rules on the fly to justify what you're doing. If that's your trade plan, that, hey, if I'm in the middle of my strangle and volatility is over 60, I'm going to hold out a little bit longer. Okay. Now, if I was closer to these strikes and volatility is where it is, I would definitely be closing. So if you had strikes in the 2050 to 2100 range, I probably would, if you were closing them, I have no problem with you closing those. Okay. If your strikes, I got one strike here, I have another strike at 2275 and another one at 2400, which is way up here. Okay. I'm not even close to worried about those. All right. So we're in good shape. We just play the percentage and you stick to your plan. If your plan is stick it out, if volatility gets over 60, because it's going to mean revert, or volatility gets over 70, or whatever method you want to use. Just make sure you have a plan for what that is. All right, I know we've stayed on this long term. I hope this was helpful. So hope this makes sense to you on what we're doing. The last thing I want to jump into is one of my watch list pieces here is RSI bearish cross under the 50. I also have a bullish cross over the 50. Okay, gives me some ideas of some things on here. Amazon crossing below the 50 on the RSI on the dailies. Okay, so we're crossing 50 on the daily, and you're about to potentially cross 50 on the weekly. Yes, so question was what GVZ. Let's just jump into volatility real quick. So OVX is volatility on oil. Okay, what do you think? Okay, so here's oil volatility. So this is crude oil volatility. The OVX is your oil volatility. Okay, look how overbought this is. Look where it is compared to the 3 ATR, this yellow line. Okay, volatility is also extended beyond the 3 ATR on oil. Doesn't mean it can't stay there. Okay, but if we go back and look, it rarely ever gets outside of that. Okay, and it got outside of it 1, 2, 3, 4 sessions, of which 2 of those sessions it dropped back during the session, and the other 2 it was back inside within 1 session. Okay, you're right at the top of it here again. All right, so there's oil volatility. It's getting overbought. Okay, you're at the 3 ATR. I don't know that levels and all that other stuff means a whole lot here, but I would expect some sort of mean reversion back to the 21 EMA, because that's where it goes. It goes up, it comes back to the 21 and goes down, back to the 21. Okay, it goes down, back to the 21. Now it goes up. I would expect it to go back to 21. Now the 21 could continue to move up. Okay, and volatility stays elevated, but I think that's fantastic for trading oil. Okay, so oil has been on a pretty good vol move way before the Hamas Israel conflict started. Okay, oil was already moving higher. That may have exacerbated it a tad. Okay, but that's the OVX, and then you want GVZ on gold. Take a look. Where are we on gold? Looking back all the way to May. Okay, now back here, remember Volmageddon back in March where gold spiked up? That's that spike right here. Okay, this is that spike that killed us back in March. Okay, when we got way outside of this Bollinger Band, but way up here into the mid 20s. Okay, we are not even close to that right now. So it gives you a sense of what's going on with that. So you've got to move higher here on the weekly, but if we're looking at the daily charts or so, it gives us a sense of what's going on. You are in gold, you got outside the 3 ATR for a session, came back in. That 3 ATR is increasing, and so it's getting harder to get to it. But something to keep an eye on in here. So there's your gold volatility. So you can see we broke through up here and then came back down to the 21. I would expect we'll still revert to the 21 on gold for everybody. So something to keep an eye on when we're looking at gold. All right. I know this is long, but I think this was hopefully a helpful thing for you guys to take a quick look. I'm just going to run through a few things. We'll do maybe another session tomorrow because we've got another meeting coming up. But let's go and take a look at where we are on some of our trades. And we'll spend about 5 minutes on these. Okay, so here's the IN portfolio right now. So this is what's happening overall. We've got a 112 in Aussie futures. That's fine. That thing's up 210%. Just nothing to deal with there. I have not set any meetings for tomorrow. I'll be looking at my calendar. So 6A, totally fine there. This naked puts at 84% there, so I'm not going to close those, not going to do anything. Strangle on ES, it's only up 6%, but it's still up 6% on the trade so far. We're no worries on anything on this particular trade right now. It's up slightly, and the dollar's starting to max out a bit. All right, oil. Let's look at some oil things. All right, yep, got a strangle. This one's down 125%. Okay, 159 when we look at that. So that's the 100. Come on. The 100 and then the, what did I say, the 59. Okay, so let's take a quick look at analysis on this one. Okay, so here's where we are. We're not deadly, we're not in the middle, we're towards the top. So because I'm leaning towards the top of this strangle, if this would hit a 2x stop, I would close this one. Just because I'm leaning towards the top here, even though I've really got quite a ways to go. I keep an eye on it. It's really not that far off center. So I'd actually have to question myself on doing anything on that strangle. And then I have one other strangle here. That's only it's only down a fraction, down 100% on this one. So we're nowhere near the 200% loss. So nothing to do on that strangle, not even on the radar. We got a 112. This is up 30% in 9 days already. Nothing to do on that. And then you've got two naked puts on here. One we just put on today, and another one we put on 6 days ago, and we also closed one today. So we're actually up, 39% on one, 1% on the other. That one's totally fine. And then taking a look, we've got one other 112 trade on oil. This is up 50% in 37 days. Nothing to do on the naked puts. Totally fine where it is. Nothing to do on oil. So we're in good shape for the most part. We just got to watch those two strangles. That's the only things we're keeping an eye on. And this strangle I'm not even worried about right now. This one really not either. It's at 124. So there's just nothing to do. All right, ES. Take a look. We got one strangle down just fractionally. We've got this December 112. These are all the newer ones. January 112. There's another strangle down just slightly, and then another 112. Nothing to do on the newer ES trades. On the older trades, we've got this put debit spread. It's we already took the profit off of the naked put, so this is just a free trade. Nothing to do on that right now. We're not in the trap. This was the next one. It expires in 13 days. We're at 91%. We cannot get this one to 95% winner yet. So we have not taken off. I could take it off if I needed buying power. I don't. But these naked puts will probably come off. Put debit spread is positive by about $400. So we will keep an eye on this. I'll give it a little time, see if we get any more out of it, and then we'll see what happens. Here's another long-term 112 trade. This is up 150%. It's up for almost $3,500. Nothing to do here except keep an eye on this put debit spread. Now, this is a pretty profitable PDS. We are definitely inside the beginning of the trap, not fully. So this might be something where, again, we might roll down. We'll do this tomorrow. If we can do a day tomorrow, we might roll this one down and capture some of that profit. Here's the Fat Bastard version. This thing's up 1,200%. Nothing to do here right now. You've got a nice winner on the PDS. There's nothing to do on these naked puts. They didn't cost a whole lot to begin with. This has some decent profit. No sense taking it off now. I got plenty of time on this one. Another 112. And if you notice on this 112, okay, this is slightly positive delta, but it's very low. This 112 is actually almost no delta. This is almost delta neutral. And then these, I'm sorry, not the BA, but this 112 is now also just barely positive delta on these. So as these age, they do lose delta, and delta goes negative on these trades. I also got just a naked put sitting in here, small profits so far. I've got my hedges on. That hedge is at a 20% profit. I'm just leaving that hedge going for now. Nothing to do on that. All right, got to wrap up. And gold, here's my strangles in gold. This one's at 59% down. This one's up 18%, and this one's flat. So I have nothing to do on my 3 gold strangles at all. They're not even in remote trouble. And if we get any kind of volatility drop, those are going to pay off nicely. Copper futures sitting on a 112 in copper. This thing's up 38% in just 9 days. Nothing to do here. No sense taking off the put debit spread or the naked puts. I've got a couple naked puts we put on in bonds. I'm totally fine on these. Nothing to do with those. And then we had some nice profits in AMD and Meta. Meta's still up 25%. AMD's down a bit, but we are above on the put credit spread on there. So there's kind of a quick overview of that, a little bit of how I'm doing the 0 DTE, a little bit of how I use charts, and what we'll do, and I gave you some volatility to take a look at there. So I think those are, that's good for today. I'm going to see if we can put another session together for tomorrow to go through some more stuff on credit spreads. My deal on credit spreads, especially on oil, was this is how I constructed, how I would construct it if I was doing it, or naked puts. Okay, I'm going out on naked puts around 60 days. I want to go 75, remember, was my support level. I'm running down to around the 12 delta-ish. I just want to get some cash. So this is the one I did today. When I looked to put this particular trade on, my max profit was 990 on buying power 4,200. So pretty close to 25% credit to buying power. So I'm pretty close. I could go up a little bit more and probably sell the 72.5, which has, I could probably do that one just as well. It's still below my 75. I could go up even higher if you want to on it, but that's how I'm making those decisions on that. And then if I was doing a credit spread, I still want at least 25%, probably closer to 30% of the buying power on this. So I'm getting 260 out of 650. So that's a pretty good ratio on that. That's basically a 40% credit to this, which if I close at 50%, that would give me a 20% return on this trade. So I do like this trade as well for the credit spread. Okay. All right. So there it is. Ashvin, I already covered 0 DTE pretty extensively for the first 20 minutes. So go back and watch the recording on this. You'll catch that in there. I got to let you guys go. Get another session coming up outside of this. And we'll talk to you guys later. Enjoy a fantastic rest of your day. And I have posted the script for those before, but I'll repost it again. All right, everybody take care. Have a great rest of your day. Hope this was helpful. Bye-bye.